Joining us right now to talk about it and much more is Roger Ferguson. He's also vice chairman at the Business Council and trustee at the Conference Board. The two organizations have a survey that's out this morning. It shows that CEO confidence fell deeper into negative territory heading into the fourth quarter. It's actually down for the sixth straight quarter. Nearly all the CEOs surveyed now say that they're preparing for a recession in the United States and in Europe. But despite slower growth expectations, CEOs say tight labor conditions and wage pressures persist, and hiring plans remain robust. So, Roger, let's break this down. They're pessimistic about where we're headed for the economy, but they're optimistic enough to say that they're going to keep their hiring plans in place. The Fed hears that and thinks what?
I think the Fed hears that and thinks two things. One is, to some degree, the message everyone else is delivering them is being delivered by CEOs, which is, the pain they've talked about is likely on the horizon. But these anecdotal data also confirm what they are seeing in the most recent labor market statistics, which is labor market is still tight. And I think what the Fed hears overall is inflation pressures have not really abated very much. That's something else that our CEOs say. And therefore, I think they continue on their path of one more tightening at 75, and then we'll see what happens after that. But I think this report is consistent with many of the things they've heard.
I would say yesterday's PPI number, one of the hotter components were things related to travel. This morning we heard from Delta and the CEO there, Ed Bastian, saying there's no slowdown that they've seen at this point in any travel. Still incredibly strong demand. So we hear from other places that, look, there's the risk of breaking things in the markets if you continue to move higher. But inflation not showing any signs of letting up. The job market's still strong. Demand's still strong. And that must be what they are focused on.
I think that's exactly right. I would say there's one thing that came in our CEO survey when we asked them whether or not, across all of the CEOs surveyed, whether or not demand had picked up, and it's clearly slowing a little bit. The last time we asked, has demand increased for your company and your sector? 38% said that it had. This time, only about 20%. So demand is still strong, but I think there's evidence of the beginning of some slowing in demand for a number of companies, not necessarily the travel area, but certainly in some other areas. But Roger, overall strength is, I think, the main message, and inflation's still there.
For a long time, you've been telling us that you're very concerned about inflation, that you think they need to raise rates, but you're also concerned that we're headed towards a recession, that there's not an easy way to land this. Where do you put concerns about market stability at this point, just watching what's playing out in the UK?
I look at the UK and say that is the result of a unique set of circumstances, a fiscal plan that was not well received by markets. It doesn't appear, as far as I can tell, to have spilled over significantly here into the U.S. It looks as though we have ample liquidity here in the U.S. to get big trades off. And so I think the Fed should be watching financial stability, but inflation and recession seem like the two more likely issues that they're confronting over the intermediate to long term.
Shepard Smith here. Thanks for watching CNBC on YouTube.